This is Eric Mwather with Mwather.com for the week of March the 12th, 2012. Let's take a look at what was a crazy week where the market almost ended the week unchanged. After this big drop here in the middle of the week, only to have a almost perfectly symmetrical V-shaped daily recovery. This has thrown everybody into, especially those who are trading short term, into some kind of confusing pattern because we were thinking that with this push down here, the market was going to at least, at the very least, base around here. But what we've ended up having is this V-shaped recovery. A very confusing setup here in the market. Hard to tell where the market wants to go, but net you really have to be um, careful not to be overly bearish, because these types of markets that don't just fall off the bed are usually markets that could creep to the upside very slowly and in your face. So if you have shorts out there and they're not working out, you might want to consider that position, because really at the end of the day, given how the market has recovered, this seems like a strong market, reminiscent of a bull market, where it pulls back but immediately recaptures lost ground. So this is looking like, quite frankly, what you'd see in a typical bull market. You have to be careful. At some point, the market is gonna stall, but right now it really looks like it really is a strong market. At the end of the week here, we see that the Dow was down slightly. End of the week here, we'll see whether the new week is going to bring further downward action, or the market is going to try and break out after 2 weeks of rest. So we had 2 weeks of rest here after this high is about 13,000. We see whether we're going to try and recapture that 13,000 level, or the market is going to move back. We see when we had that down day, big down day, the market touched the 10-week moving average right there and bounced right back up. If you take a look at the RSI, you'll notice that the RSI is starting to coil like we discussed last weekend. Uh, Previously, the highs from 2000, that or made and recorded when the Nasdaq on the Dow hit that level and turned around, and we see we are also hitting that level and pushing lower. So this could be where, as far as the market goes right now, depending, as the RSI can predict here. Also, you take a look at the MACD. We see that this crossover has already taken place here. So there is truth that even though the market recovered with a strong bounce, that still the short-term market's gonna be under some kind of pressure. Here's a Dow daily. You see that one-day move, or down 200 here, brought it close to its 50-day moving average, and then an immediate bounce. So it's a strong market. Very hard to even predict whether it's going to have a strong pullback. But as long as the market is trading above the 50-day moving average, for starters, we have to always just play the uptrend if you can find quality breakouts in some select sectors that are leading the market. If you take a look at the Dow now from a daily perspective, you'll notice that we had broken this red line with that one big down day, and now we've worked our way back to this underside. This red line could now be upside resistance. If the market can't move above this line again, maybe the market's next big move is to the downside. Dow Transports, which to me is telegraphing where the market wants to go. Early in the week was trading really down here at about 5,000, very close to 5,000, very close. Bounced back ever since that one-day move. But I think the Dow Transports, if you take a look at the MACD, are probably the leading idea that the market could pull back. You see that we are just about to close below, or trade below zero on the MACD. The last time this market moved below zero on its MACD was July of last year, July of last year time frame, and we saw the market have a big down a couple of months there after this move below zero last year. So we are very close to this move below zero here. So let's keep an eye on that. If that continues being the case, then that would suggest again that the market still wants to go down. As far as the S&P 500, we see that we recaptured this level above 13,063.61. 13,063.61 is where was a breakout level. The market is closing above that level, so that's in effect still on breakout mode. That being the case, It's very tough to be bearish in this market. You gotta be very careful. Unless you can find something completely breaking down, I think we need to be very careful in shorting the market wholesale, because this is a very strong looking market, one that even after a pullback manages to recapture lost ground by the end of the week and closes close to positive or slightly down, or let's call it unchanged. Let's take a look at the banking index here, and you see that even though the banking index has been moving higher, let's say since February, it's been moving higher with incremental monthly highs here on the daily price on the, as far as the BKX is concerned. What you really have to watch for is the fact that the RSI is not following through, so the technicals are not moving to new high ground, even though we see that the price is making nominal or short-term highs here. This might be bearish after when all is said and done. If you take a look at the dollar here, one of the reasons why commodities might be under some kind of pressure is because we see the dollar again confirming this bounce here after it made this lows about 2 weeks ago, and now bouncing after hitting this level, this price channel lows here. You see that also that the RSI, as far as the dollar is concerned, the RSI was bouncing off this this line here. And also we see the dollar having a nice week because it moved its RSI above 50. You'll see that the MACDs are also telegraphing a bounce was due in the dollar. If you take those, that low and that low, draw a straight line, you find that the dollar is bouncing exactly where it should. So the dollar could be moving higher and pushing commodities lower. So that might be the case in the, as far as the commodities are concerned. And again, if you take a look at the dollar from monthly chart, and again we are using the UUP to track the dollar here, is we have what seems like the RSI. If you take the highs of the RSI, you have this gray line, and then the lows can be forms another line. So we've been trading in this wedge type formation. Should we get a breakout here, as far as the dollar is concerned, a breakout about this line, the gray line here, and also a move above 50 on the RSI, you might see this market take off. That is the dollar, which might be putting pressure on the general market. Also take a look at again another idea that commodities are under pressure is, if you take a look at the GDX, it's been holding steady every time we have a sell-off, trying to hold this level here. It's been trying to hold that level, and so now we are very close again to either testing this level or possibly even breaking below that, what has been support going back to the beginning of 2011. So this has been where this market, or the GDX, the gold miners ETF, has been finding support. Should we break down, that is also gonna coincide with the dollar push to the upside. The VIX, I think the VIX, even though it's it had this big move here, but could not move above and stay above the 50-day moving average. So the VIX to me continues to be under pressure. As far as the VIX is under pressure, suggests that a market that is going to slowly continue moving higher. So we're in this confluence. Should we don't be surprised to see this market continue pushing the VIX lower and the market to push higher. It's a very confusing setup here in the market, but we need to watch the VIX for confirmation of a bounce above at least the 50-day moving average. If it can recapture the 50-day moving average, then you can say that the market might be under pressure. But as long as the VIX is trading below the 50, suggests that the VIX is going to be under pressure. The market wants to move to the upside. Now, one of the reasons why I say you should be very careful to short this market is because if you take a look at a big sector like the S&P 500 retail space, you'll see that we broke out sometime beginning of this year 2012, breakout there, and we've been almost straight up. We've been up the last 1, 2, 3, 4, 5, almost 6-7 weeks. That's a very strong breakout, and that being the case, you have to be very careful because it shows a market that is very resilient. If you take a look at another area of the market that is showing some tremendous strength, it's the home builders ETF. You'll notice that now we are closing at a fresh 52-week closing high, which is very good after it had this base type formation After basing here for a couple of weeks, we see we had a move to new high ground there. So again, a market that is pushing some sectors to 52-week highs is a scary market. You need to be very careful before you short. You'd rather short the market days and weeks after it has already collapsed. No need to try and pick the highs, because that's almost impossible. If you take a look again at the XHB from a monthly chart, you see that in effect what the XHB is doing is going back to pre 2008 crash levels. So this is 2008 crash levels. Right there is where the crash, the market broke down and had this big drop here. So we are trading, in effect, breaking out about this level. That's a critical psychological level. So this is a market that could, given this chart formation, continue moving to the upside. That being the case, you need to be very careful and not short the market, and wait for the market to tell you when it's time to short. Don't jump the gun. If there's going to be a time to short the market, it's going to come at some point. Eric Muather with Muather.com. Peace and blessings.